The difference between a tax and a levy is very clear. A tax is spelt T-A-X and a levy is spelt L-E-V-Y.
Oh, Matt, this is entirely incorrect. A tax is something you hate and a levy is something you like.
One for Mum, one for Dad, one for the country.
And there has never been a more exciting time to be in Australia.
Dead, buried, cremated.
Australia's basically done for. We'll just end up being a third-rate economy. You know, a banana republic.
Just follow the money.
G'day, and welcome to Follow the Money, the Australia Institute's podcast demystifying the big economic issues in Australia and putting them in plain English. I'm Ebony Bennett, Deputy Director at the Australia Institute. The South Australian Government announced in late June 2017 that it was going to follow the federal government and introduce a levy on the big banks. The announcement might have come as a shock to the punters, but the reaction from the banks to the state-level bank levy was less of a shock. The banks are upset.
Breaking news out of South Australia, the state Liberals there have decided to block.
A big shock to the banking industry when Treasurer Tom Koutsantonis announced this levy in...
The South Australian government's copping a lot of flack this morning over its surprise bank tax.
Accused South Australia of economic vandalism.
Still not clear if bank customers will be slugged for the South Australian government's proposed new bank tax.
But as Richard Dennis, the chief economist, and Matt Grudnoff, senior economist at the Australia Institute, explain, the banks are making a big fuss over what is actually a small impost on their profit margin. Less than 1% of the $44 billion the big five banks made in pre-tax profits last year. You know, to be exact.
The federal government introduced a bank levy at the last budget, and it sailed through Parliament and was incredibly popular with everybody except for the banks. And so what the state government said, well, that looks like a good idea. That's a good basis for a tax. So in the last South Australian budget, they've introduced their own levy. And this levy is basically a smaller version of the federal levy. That is, it's based on the same revenue base. It collects from the same kind of liabilities or loans from the banks. It's just only 6% the size because the South Australian economy is about 6% of the national economy. Given that the federal levy was 6 basis points, this will actually be 0.36 basis points. Now, basis points is something that the financial markets basically invented because they were dealing with really tiny numbers. So a basis point is 0.01%. So 0.36 of a basis point.
So sweet FA would be another way of putting it.
Pretty much, yeah. It's a tiny, tiny levy. But despite this, the banks have gotten pretty hot under the collar about it.
And do the banks have a point, Richard?
They have a point that this will take money from their shareholders and give it to the South Australian government to spend on services. Look, the banks have a point. They would rather not pay this tax. They don't have a point when they suggest that this tax will in some way harm, jeopardise or, dare I say, destroy the South Australian economy. It's a small tax. It's modelled, as Matt said, on the federal government design of the tax. The banks really are saying we weren't strong enough to take on the federal government. We think we can take on the South Australian government, and we hope to scare every other state government by making an example of the South Australian government.
Yeah, and that's a really important point. The levy is only proposed, the South Australian one is only proposed to collect a tiny amount. But I think this has got more to do with the fact that the banks are concerned that if the South Australian government gets away with this, then other state governments will do the same.
What you're saying is if every state did it, every state would have more money to spend on health and education.
That's exactly right.
So you can see why the banks are afraid.
We need to make it clear that we're upset about this. We don't think it's good for jobs. We don't think it's good for the business certainty in South Australia.
The people who are going to pay for the tax is not the bank, it's customers and shareholders of the banks who are normal people.
It's a big back door that says exit in South Australia, and this state tax, a one-off tax in South Australia, not going to help.
It's fair to say this reaction is somewhat overblown. Australian banks are the most profitable in the world. As a percentage of GDP, bank profits in Australia are 2.5 times larger than in the United States and 3 times larger than the UK.
Exactly how much are we talking about this levy raising? Is it a huge tax? Is it, in the order of the GST, for example?
No, it's actually quite a small tax. So it's expected to collect about $1.5 billion a year. So to put that in perspective, I think the federal government collects about $400 billion a year in revenue, and the GST is around about $70 or $80 billion a year. So it's quite small. The South Australian levy is only 6% the size of the federal levy, so it's only expected to collect just over $90 million a year going forward. And that $90 million a year, that represents about 0.2% of the profits of the big five banks that it's been levelled on.
Crippling.
So, to be clear, less than 1%.
That's right. So it's 0.2%, so it would be $2 in every $1,000 of profit the bank makes.
So $90 million a year could send them broke, the big banks, and I think they spend about $1 billion a year on advertising.
Yeah, exactly right. And what's more is that the levy, as I said, is expected to raise about $90 million a year. The big five banks pay their CEOs, their 5 CEOs, $45 million a year. So half what the levy is expected to raise. So 5 people within the banking industry earn half of what this levy is.
So CEO pay must push interest rates up.
Absolutely, and it's clearly about to send them broke. And the banks have launched themselves an advertising campaign to try and stop this levy coming about. And what's interesting about this advertising campaign is if you read it or you saw it on TV, you might think that the bank tax will make South Australia less competitive compared to other states. But this is just not the case. The South Australian bank levy is levied on the same liabilities, the same loans as the federal levy. So let me give you an example. If the Commonwealth Bank were to write a new loan in Sydney, not in South Australia, but in Sydney, then that would add to the money that the South Australian levy collects. So most of the time, state taxes only really affect people in that state. So if a state increases land tax, for example, it's only the people in that state that are hit by that tax. But this new South Australian bank levy actually impacts the big five banks' loans all over Australia, not just in South Australia. And because of that, it can't therefore disadvantage South Australia, since the base of the tax is from every state and territory.
Now, I think there's a pretty simple solution to this. I think other states should copy the South Australians.
And that's interesting because the federal government has been complaining recently that the states are always asking the federal government for more money. And so they're always talking about, well, the federal government should increase the GST. And the federal government doesn't want to do that, in part because all the revenue goes to the states. So they've been telling the states, you need to raise more revenue. Well, the bank levy is a great way for the states to raise more revenue. And so what the federal government should do is it should back the South Australian government on this bank levy, but also, possibly through the COAG process, it should get together with all the other state treasurers and say, hey, here's a way that you can raise more money, be less reliant on us, the federal government, and encourage them to all introduce their own bank levies.
But Matt, that's crazy talk. I mean, let's be clear, if state governments and the federal government work together to collect more tax from the banks, I mean, where does that end? I mean, before you know it, they might work together to collect more money from the oil and gas industry.
Look out.
Well, this has to stop. You can see why everyone's so worried.
Where will it end?
Where will it end?
With more teachers?
Oh, the humanity.
Better hospital services?
Yeah, or Australia that collects about as much tax as the average European country.
Yeah.
Well, here we go again. And now we have a great big new bank tax. I think it's entirely reasonable for a bank to make profits. They deal in lots of money, they deal in a very important space, and they make lots of money, quite frankly. But they also pay their fair share of tax like every other corporate.
Vocal South Australian Senators Corey Bernardi and Nick Xenophon were opposed to the bank levy. Corey Bernardi thought it was a travesty that his former Liberal colleagues even introduced the bank levy at the federal level in the last federal budget. But actually, bank levies are quite common in other countries, particularly in Europe, where at least 14 countries imposed bank levies after the global financial crisis.
Unfortunately, Australians are known for their innovation, but
Stump jump plough,
Hills
hoist. There are many, but the bank levy is not one of them. Unfortunately, Scott Morrison, you may find this difficult to believe, he's not necessarily the most inventive when it comes to taxation. There are lots of bank levies around the world. In fact, about half the European countries have some kind of bank levy. Most of them are larger than the bank levy in Australia. This is not a new thing. A lot of the European countries introduced it around the time of the financial crisis. And none of these countries that have introduced this levy, including the United Kingdom, including France, none of them have gone broke. None of them have seen their banking system collapse. None of them have seen all their banks go bust.
Generally speaking, I guess you are both economists. Why is this type of levy a good idea, in essence?
Well, it's interesting. I mean, apart from the fact that it's a great way to collect the revenue to spend on the services we need, well-known leftist organisations like the International Monetary Fund have suggested that bank levies are actually not just equitable but efficient, because the way governments effectively stand behind big banks, effectively guarantee that they're too big to fail.
Which happened during the global financial crisis here
Absolutely.
in Australia.
Effectively, that's a public insurance for the banking system. And usually when we have insurance for something, we pay for it.
Yeah.
Well, the big banks are enormous beneficiaries of government willingness and demonstrated ability to step in and bail them out if things go wrong. The well-known leftist International Monetary Fund, IMF, have suggested that these sorts of levies are actually an efficient solution to that problem.
And this insurance policy just doesn't help them because, they know that they're going to get bailed out. It actually helps them with when they go out and borrow money. So when the banks go out and get money from international capital markets to then lend to us, they pay a lower interest rate because the capital markets know that they will always get their money back because the government of the day will step in and save these banks.
Are you saying the big banks have an advantage over the smaller banks and credit unions?
That's exactly right. They do, and they have a lending advantage. And the levy that we currently see is actually smaller than what this advantage is estimated to be.
And I'm confused because your research has previously shown that the big banks actually charge us more for mortgages than the smaller banks and credit unions. So you're saying that they can borrow cheaper and they lend dearer. This can't be.
If that were to occur, Richard, then what we would see is enormous profits from the banks.
All right.
And that's the other advantage that the banks do get from this implicit guarantee, is that people think, they're a safe place to bank. So Australians go, well, when they're choosing a bank, who am I going to choose? The Big Four and Macquarie are a little bit more expensive, but I'll bank with them because I know that my money will be safe.
I pursued it because I think it's the fair and proper thing to do.
We need to recognise that if we want to fund schools and hospitals, if we want to fund the social welfare system, if we want to fund all of the foundations that we believe are the pillars of a decent society, then we need to raise revenue.
And what about those claims at both the state and federal level that banks will pass on the costs of the levy to their customers in the form of higher fees, or that shareholders will suffer a loss from reduced dividends? Well, Matt looked into that, and his research found this to be untrue in most cases, or negligible cost at best.
We did some research to look at what the impact might be on an average super account. So most people don't own bank shares directly. Most people don't own shares directly. But in their superannuation funds, they do own some shares. And so we worked out the average super account would lose only $7 a year, just $7 a year because of the bank levy. And that assumed that the banks fully passed through the levy to their shareholders. But as we know, the banks have a lot of power in the market. They're a big oligopoly. They're able to gouge their customers. They're able to earn big super profits. Now, if they decided not to pass through the levy to their shareholders, but rather pass it through to their customers, there was concern that, again, people would be impacted by having, say, higher mortgage rates. But what I also found out was that if people switched from the average interest rate on an average mortgage with the Big Four banks to instead the best rate that I could find at the time, they'd save $2,000 a year. So if you're concerned about the bank levy being passed on to you, you don't have to pay it. It's only on the Big Five banks. If you happen to bank with one of those, take this as an opportunity to shop around and get a better deal.
That's been episode 19 of Follow the Money, brought to you by the Australia Institute. You can find more episodes of Follow the Money on our website at tai.org.au/podcasts, or wherever you get your favourite podcasts from. And if you liked it, please do give us a rating, as it helps other people to find us. For more reading on the state and federal bank levies, Matt Grudnoff's work is available on our website. You can follow him at Matt Grudnoff, that's GRUDNOFF, and Richard is available at RDNS_TAI. The Twitter handle for the Australia Institute is the Oz Institute with an AUS, and I'm on Twitter at Ebony_Bennett with a double N and double T. We're excited to announce that we have a special event coming up in August, the Accountability and the Law Conference, where keynote speakers Nicholas Cowdery and Jeffrey Watson will be discussing the case for a federal anti-corruption commission. The conference is on the 17th of August and tickets are available on our website, so we really hope to see some of our listeners there. This episode was produced by Jennifer Macy. Jonathan McFeet from Pulse and Thrum composed our title track, and you can find more of his music at pulseandthrum.com. Thank you for listening.